Good morning. Welcome, my futures family. It's great to be back with you here on the Market Prep. Wednesday, June the 21st. My name is John Hogan. As always, thanks for trusting me with your time. June 21st, the beginning of summer. Today or tomorrow is the longest period of daylight in the northern hemisphere. It won't even get dark probably in Alaska tonight. But as always, our focus is here in these markets and always thinking about context, good risk management, and patience. It was a nice few days off. It's always good to get away, and it's always good to be back. We've got a lot of exciting things happening here at Top Step. We'll have to wait and see what those are, but I'm very excited to be here and be ready for all of that. Thanks to JD for covering for me for the last couple of days. I understand they had some issues yesterday, but hey, that happens. And if you didn't hear, we have a friend here at Top Step. Josiah lives in Florida and found out I was going to Naples, and he's an Uber driver down there at certain times, one of his many hats, and he offered to pick us up at the airport and bring us to our place, which was great. It was a lot of fun to meet a user and have them pick us up at the airport. It was just a really nice thing. It's a lot of kind people out there, and I know you're all very kind people as well. So again, it's very, very good to be back in the seat, looking at the markets, looking for opportunities. Like I said, it's always good to get away and good to get back. I don't think I ate anything but fish while I was down there. The fish in Naples, Florida, and Marco Island is just fantastic. So I had to come home last night and have a nice cheeseburger. All right. Well, what do we have going on today? 9 o'clock, Chairman Powell begins his testimony in the House today. He'll be also testifying tomorrow. In the Senate, we also have a number of talking feds throughout the day today. At 9 o'clock also, we have Cook, we have Jefferson, 11:25. Goolsbee is supposed to be speaking. And at 3 o'clock Central Time, Meester and Bowman are due to be speaking without any other economic data due out today. So it's going to be a day that there's going to be a lot of focus on those talking feds. U.S. stock indices looking like they're going to be opening a little bit lower again, with Powell, preparing to present his two-day testimony. Investors are going to be watching all of this for any hints on any plans for the July FOMC meeting. With the lack in U.S. economic data, there are a couple of earnings. One already out this morning. Winnebago, which kind of mixed returns on that, but we also have KB Homes later on this afternoon, so those may or may not be impactful. We're by no means in earnings season here just yet, so just a couple of notable earnings that due out today. Crude prices remain largely range bound, awaiting the API this afternoon and the EIA tomorrow on Thursday because of the holiday. Both of those delayed one day. So as always, we're going to take a look here at the VIX, 1378 down this morning. I think the last time we've seen it this low was back in July of 2021. Very low VIX, low volatility. Manage your expectations as far as profit opportunities are concerned. Dollar index down, up a little bit this morning, but down from when I left. It's 102.65. I think we were still up around 103 and the upper 103s when I left on Wednesday. And the yield on the 10-year 3.76, just really hanging right around that level. As always, please make sure you hit the lucky like button, share, comment, question, feedback, heckling, love are always welcome here on the Market Prep. Forecast, anything, reflection, coach's playbook, always looking for good feedback. And so let us know how you like things. We do have Top Step TV scheduled to begin expanding programming next Monday. We are hoping that we're going to be all prepared for that. So we're going to be looking forward to that. And make sure you subscribe to our YouTube channel. I don't know if I mentioned that, so you can get notifications when we do go live. So it's always good to see everybody. Thanks for coming in and seeing me today. Rooster first in the room, crowing early, winning the prize this morning. Dan Trader, good morning. Pete Caprice, Dimitar, Shaw, Kyle, George, Lacey has said good morning to everybody. She missed us, and she's been kind of hanging around with me this morning. So Matthew, good morning. Theo, good morning. John, Alejandro, Will, Stephen, Chaz, Dr. VJ, good morning. Scott Saw, and he conquered. Henry G. Hagel Matters, Kit, Chris, Bill, John, Charles, Denise, good morning. Jason, this song gets my juices flowing too. I sit here and I kind of bop and I go, come on. James, Rusty Golfer, my spirit animals with us this morning. Anissa, good morning. Nastic, Stephen, Dan Trader, Trading Research. Will, good morning. Trading Stocks COVID-19. Good morning to you. Should have given me a free golf lesson. I could use free golf lessons. That's right. Welcome, Sarah Hall. Prayers and love. It's great to be back. Lisa, Robert, JT. It seems like forever since we've been here. It does sometimes, you know. I mean, I missed 4 days of work, but it seemed like a long period of time. Vince, good morning. Travis. Yeah, Naples was great, man. It was very nice. Didn't make it to Sneaky Pete's. We didn't really get to like the strip, like Naples. I guess it's Fifth Avenue. We went up and down it, but we went more kind of local places, which are the ones that I kind of prefer. So we had a good time though. Matthew, good morning. Bear goes long. Vince, 90 bit even. Shubham, good morning. RCU, good to see you. And Vance and Brian. Today, as always, on Wednesdays, we have group coaching. There is the link to join me for the Zoom meeting. Looking forward to having hopefully another robust session of group coaching today. And then after that, of course, we'll check out Make Hogue Money, see what kind of opportunities we can find late in the day. All right. Just waiting to see if my friend Josiah pops in and says good morning. Maybe he's busy this morning doing something. But it was very nice of him to reach out and give us a chance to meet him and get us a ride to our place, which was a little condo, right around in Naples somewhere. I didn't really get to pay attention to the driving all that much when I was there, which is probably a good thing. Right. Let's jump into the charts. Let's take a look and see what we're seeing here. It has been a few days, just kind of getting my feet wet here. This is the daily in the S&Ps. We can see, obviously, upside structure still remains. We've got a bit of a pullback here after last week's FOMC meeting and all of that. We see that we've lost a lot of open interest this morning. 622,000. Now that's part of expiration. Those are positions that are just settling in cash. It's not like everybody is leaving the S&Ps by any stretch. This is something that is a function of rollover, and it happens every rollover. The front month open interest lost 2,100. So that's yesterday. I don't have the numbers from the last few days. However, it does appear that we may be kind of setting up a bull flag in candlesticks. This would be a rising 3 candlestick pattern. We have our good friend Mick, our risk manager, always mentions the fact that when the market is an upside trend and you get 3 down days, the next day is usually an up day. We don't know that. We can't predict that, but it's just something to keep in mind. We're going to see maybe some decent opportunities against the highs of this trend line up here on the 30-minute chart to see if we can get a decent breakout to the upside from our bull flag, potential bull flag. Here's our 30-minute chart. So The NASDAQ is much more kind of reliable as a bull flag because there's 3 points of contact. You're not really seeing that here in the S&Ps. Of course, Monday's activity doesn't even count. There was absolutely no volume, very little time to trade. So if we were to take this and put a trend line off this high and across, I mean, we're looking at our overnight high for the end, for the potential for this move to break out to the upside. Where are we though? We've got a little bit of potential overnight inventory that has piled into the short side, but we're still largely in range and in value overnight. We've got an inside extended trading hour range. I'll be watching this trend line up here to see if maybe we get an opportunity to see some play in that area and to see potential change in short time frame direction at that level. In the short time frame, though, we are putting in lower highs, we are putting in lower lows. Keep an eye on all of that. Let's move this down here just a little bit. And we go. And we'll put this right there. So there's our potential upside breakout trend line. Basically, as we said, now point of control would be that level. It was in a way a double distribution day. You can see high volume here and a higher volume here. We've now basically, even before the open, fallen into repair where we traded to this high volume node here, basically our point of control. Now we've traded to a high volume node down here. What else do I have here? Just inside the value area, just try and stay patient unless there's a change against this trend line. Better trade locations are likely to come as the day goes on. So it's not a true double distribution day. We did close out the single TPOs here that occurred early in this session. We initially had the initial balance at the low of the day, but we ended up putting in a weak low here, a poor low. There's no excess down here. It represents an unfinished downside auction, which may become important when it becomes important. But now look at our high, look at our overnight low. We've basically, in the overnight, repaired this hole in this profile. So now, you know, as always, anything can pretty much happen. Being where I am, being away for a few days, I'm automatically going to remain patient unless something really jumps out at me this morning. So this is one of our markets that did not hold the initial balance as an extreme of on one side or the other. It looked above, barely looked below. Barely. This actually could, by some rights, it be included somewhat in the initial balance, but it is one tick outside and it's in C period. So it's not like it was extending as that first hour was finishing up. All right. Patience. We're already in repair. See if we repair in regular trading hours and keep an eye on this trend line. It's not a strong trend line. There's only 1-2 points of contact, but it's all we've got to lean on for a potential breakout of a bull flag. After those 3 down days on an uptrend, here's the crude oil, centrally located between weekly kickoff high and weekly kickoff low. Of course, we should be trading the August contract. The July contract has expired. We can't even trade it if we wanted to. So August contract, last week's high, last week's low, weekly kickoff high, weekly kickoff low. We've got a little bit of space in and around the weekly kickoff levels, but last week's high does look kind of interesting for an opportunity. It's rejected above that level twice. We added 19,000 pulling off from that level yesterday in open interest. That's pretty good, but the market is really centrally located and kind of exhibiting an equilibrium. People are comfortable doing business in this area. We're in kind of our third day of potential balance area. The simple moving averages, however, this is the 200, the 100, and the 50 session simple moving averages on the daily chart are all indicating that overall, in the longer time frame, this market is remaining weak. It's holding structure to the downside. Medium time frame structure, balanced. Short time frame, I think, also somewhat balanced. Here's what we're looking at in the 30-minute chart. No real overnight inventory. The market really just opening up here just a couple of minutes ago above value. Here's the area of balance. I'm looking at last week's high, Monday, Tuesday night, or Monday night, Tuesday. It's showing some resistance up at this level, which lets me limit risk. If I'm looking for an extreme on the downside, it's probably going to be down here around yesterday's regular trading hour session low, just so I can limit risk. Here's the TPO chart from yesterday. So we had some pretty good access here, access on the low, normal variation, neutral stance, the market opening above value. If it remains above value, we could certainly check points higher. We could check points lower too. We've got naked point of control from yesterday down here. It is going to be an interesting day. I lost my charts here, it looks like. There we go. Thank you. And what else do we have here? Last week's high resistance, the lower extreme, the initial extreme again would be yesterday's low. Here's the TPO chart. IB is the high of the regular trading hour session, and we've just opened and traded to that high, to the tick this morning. This is probably not going to be represented as a very strong high. The market looked lower, came all the way back up. We've got an afternoon pullback low down here, which 43. I'm kind of looking at this area as the afternoon pullback low. The 12 o'clock bar traded down here to 70.43. The previous, that's the 11:30 bar traded down to 70.27. So if we are going to be rejecting this area, we want price to remain robust above these levels. So the market could come all the way back down to these levels before really kind of finding buyers, if that is the case. We do have a weak high. In other words, our regular trading hour session high is equal to yesterday's regular trading hour session high. It's indicating that the upside auction is likely not done. We do have some potential repair from Monday, which was a double distribution trend day on a holiday, very low volume, but it doesn't change the fact that visually this market could come up here and trade to an assumed point of control in this distribution of time and in volume. All right, let's take a look at the NASDAQ. So NASDAQ, very similar to the S&Ps. Obviously, the market is holding upside structure. We've got the 50, the 100, the 200 session moving average below price, pointing higher. A lot of space before we're going to be able to get to those. The structure is obviously higher. The front month open interest was lower a little bit yesterday, although we did lose about 84,000 overall. But again, that's more expiration and contracts that are being settled in cash. So we got our 3 down days. We've got a potential bull flag. We've got our, what are those called again? Rising 3 candlestick formation. Some people call them crows. But we're inside regular trading hour range, extended trading hour range, I should say. Here's the 30-minute chart. Okay, inside regular trading hour range. Overnight inventory a little bit to the short side, near the low of value. This could offer opportunity. Where is my trend line? I swear I put it on here. But we're looking at, I think, closer points of contact here. Hang on 1 second. So there we go. So there's our upper trend line for a potential bull flag. Let me get that on there. All right, here we go. So overnight inventory short, near the low of value from yesterday. Potential, again, for repair. It's not a double distribution day, but the market, has two distinct high volume areas. The market may just try and target those early in the session today. Here's the TPO chart. So again, not a true double distribution day, but obviously high volume here, obviously high volume here. Markets traded to this one, trying to trade to this one in the overnight session. We'll see what happens when this market opens up. We have some pretty good excess here on Monday, but most of our excess on the way up here has been on the downside. So we've been pretty much completing downside auctions, leaving excess at the lows. This was a late spike, which we have yet to really kind of get above this area here. Our current overnight high is in that area. That overnight high looks like a very interesting spot, with the fact that it's the base of the late spike here, and with the trend line coming across for a potential breakout to the upside. We don't know what's going to happen, of course. These trend lines, without any real economic information, we don't know what the talking feds are going to say, and we don't know, what kind of opportunities those breakouts are going to bring. We just have to trade what we see, right? And what we are seeing here in gold might be a potential issue for any longs in this market. So this is the daily chart. $50, $100, $200 session moving average. This is the August contract, obviously. So last week's low is a very interesting level. I was kind of calling the area between last week's low and our weekly kickoff low kind of no man's land. I'm going to be looking for opportunities at the extremes of these levels. We're looking at an opportunity there now. Yesterday, we added 7,100 in open interest. That's pretty good. That's a lot for gold, but volume wasn't all that great. It looks like we've attracted new sellers in this market, and if those sellers remain present in this market, we could certainly see a continuation below the weekly kickoff low, not to mention last week's low, right? So that open interest increase yesterday, I think, increases the odds of this market trying to continue this move to the downside. We did see some previous rejection in this area. We saw it last week. We saw it yesterday. If we exhaust the buyers down here and these sellers remain aggressive, this market could potentially continue this move to the downside. Where did it trade to? Here's our 30-minute chart. We have overnight inventory that's to the short side. It's kind of giving us another opportunity down here near last week's low. At the very least, we'll be able to limit risk. If last week's low holds, then we've got some pretty good upside potential. If last week's low falls and we show some significant participation down below there, then we could see this market continue this push to the downside. Here's where we added all that open interest yesterday on this big, decent move to the downside. Here's the TPO chart. Excess, IB high, excess, continuation, last week's low right here. We're right up against it. It's kind of presenting an unfinished downside auction in a longer time frame with the exactness of our current low. It's going to be an interesting trading day here in gold, it looks like. What else do I have here? That B shape that we put in gold yesterday would usually be a long liquidation move, but we added a whole bunch of open interest, so that long liquidation It's not being supportive by a drop in open interest. As a matter of fact, it's looking more like selling came in and pushed price lower, and they're still in this market. They're still trying to push this market lower. All right. To the euro. Euro is opposite. I mean, it's just not acting anywhere near what gold is doing. We got a potential cup and handle move here. We do have a potential bull flag here. It is pretty central within weekly kickoff range, but last week's high looms above as a potential visual area for the market to go. Yesterday, we added 5,600 in open interest. Not bad. Volume wasn't all that tremendous, but the open interest was kind of interesting, which would be unsupportive of a potential bull flag. Here's the 30-minute chart. Here's where that bull flag has 3 points of contact. Here we are. 1, 2, 3. 1, 2, 3. If we break out and accept above this level, you have to go with it. If we don't, the rule is you got to fade the extremes until there's a breakout that's accepted outside. You fade the extremes in this, acceptance above, you go with. Here's the 30-minute chart. I'm sorry, the profile chart. So we have a weak high here on Friday, an unfinished upside auction. We have excess and, everything since then, excess low. This gets back prior to when the market was the front month, but we have, a rejected possible. We have an excess low. We have an excess low, unfinished high Monday, normal variation day yesterday, opening in range and in value. Maybe a little potential repair here, but we'll just be watching to see on the extremes what this market will intend to do. It's a little bit confusing with the dollar as weak as it is and gold hitting lows and acting a little bit different than the euro. So here's the 10-year. Again, all I can say about this is balance. I mean, it is very range bound. It got what it was looking for on Wednesday. It is now seeking new information, and it may be a while before that information comes to play. The volume yesterday, open interest, inert. We lost 2,200 in open interest, which is nothing in the 10-year. So again, I'm going to be patient, wait for the market to establish an early range and focus on those extremes for my opportunities, be they fades or be they going with something. Here's the 30-minute chart. All right. Monday. A little bit of a gap there. Overnight inventory to the short side. Watch the overnight low. If we can't find continuation down there, that may be enough to scare our overnight shorts into getting out of these positions, which would give us better opportunity for a move to the upside. It is a double distribution trend day yesterday. So repair is possible. Doesn't look like that's the idea here so far. So you got a visual in the point of control from Monday's session. You got a visual in the point of control from yesterday's session. Stay patient. I'm not looking for any big things to happen here. And when I say that, something big will happen. So I'm doing you a favor if you're trading the 10-year, and I'm saying not expecting much from this market today. And here is the NASDAQ, or natural gas, I should say. Today would, I think, probably be the last day for the July contract. You can trade either the July contract or the August contract. I've left it on the July contract today, and of course, we will be in the August contract tomorrow. Volume was about even the last time I checked, so we're going to be kind of. I'm thinking patient today. There was, however, a late spike at the end of the day yesterday. Last week's high and low, relatively wide range, weekly kickoff high and low. Got some space in and around those. Here's the 30-minute chart. So we tried to close out this gap, almost did it. Seeing some pretty good move to the downside, losing 9,900. So that was long liquidation that occurred yesterday. Here's the TPO chart, double distribution with a B shape. So that's supported by the loss in open interest. The market never really came back into the space here between these two distributions. So it seems to be rejecting price as we speak. We got a potential repair down to here. We've got a little bit of a gap down to here, which is more of a prominent point of control. IB Extreme, yes. And here's the late spike. So there it is. The market closed to 492. So the market settled right here in the late spike. The base of the late spike is about $2.51. We've opened below or inside the late spike. We are showing signs of acceptance of lower pricing. Be patient though. You got to look for good trade location. I think we did have some now we don't really have any overnight inventory, but that late spike is our main nuance. And if you ask me, our main ruling reason for taking a trade today, that's the most powerful nuance that we see here, is the late spike and the acceptance of lower pricing. So I'll be looking for opportunities to sell strength in this market. It could come all the way back up to the late spike before finding real sellers and continuing this move to the downside. But remember, yesterday wasn't real sellers. Those were long liquidators. We're looking for new business to come down and push this market lower below the base of that late spike. All right. So I'm, feeling pretty good. I think I'm relatively sharp. I think I'm ready to engage in the markets after my vacation. We got home, when you get home too late yesterday, we were able to sit, relax, have some dinner, watch a little TV, and sit down here and do a little bit of research. So again, I'm looking forward to an interesting and challenging trading day, and aren't they all? Stephen, okay, thank you. Not a fan of the banner covering up the bottom of the charts. Try to make sure that I put the charts kind of high enough and make them big enough for you to see, but I apologize. Thank you for that feedback, Stephen. Declutter the screens, please. All right, thank you again for that feedback. With a volume profile, your way to set the New York session only, well, yes, the volume profiles that I put on those charts are for the regular trading hours for those products. Different products have regular trading hours. Like the equities in Central Time, 8:30 till 3 o'clock. So that's 9:30 to 4 Eastern. The currencies, gold and the treasuries open at 7:20, but gold closes at 12:30. The others close at 2 o'clock. And the energies open at 8 and close at 1:30. So that's kind of how I keep the regular trading hour sessions, not only keeping the volume profiles on there, but keeping them separate from the rest of the chart. So I know this was regular trading hours and this was not. Take on the Jay Powell testimony, who knows? Good, Sean, liking the ticker at the bottom. The sentiment is a real-time look at Top Step Trader positions. There's a little bit of a delay to it, but we're going to be working with that, I think, a little bit more, and you might find it very interesting as far as understanding your competitors. Looking forward to getting that out there as well. So, all right, well, let's take our deep breath. Stay humble, grateful, and creative today. Don't forget, stay centered. If you find yourself emotional or angry, it becomes very difficult to make good decisions. Find your way back to center, let it go, and we will see you, I'll see you for group coaching today, as well as Make Hogue Money. And just glad to be back in the seat. Glad to be back with all of you, my futures family. Blessings. Stay kind to yourself and others. Say a prayer for peace, and we'll see you later on today. Trade well.